Hello, I'm Mario Toneguzzi, managing editor of Canada's podcast, Taking Care of Business today with Don Kottick, who is president and CEO of Sotheby's International Realty Canada. Thanks, Don, for joining us today.
Thanks, Mario. Thanks for having me. Great to see you as always.
All right, super. Well, let's talk about a new report that you folks have on the state of the luxury market in Canada. Uh, how would you describe the luxury market these days in the country?
Well, it's interesting. If you look at how the year started off, we started off with somewhat of a slow start, and we noticed that our pending sales started to trend up. We saw that in February, March, and by the time we hit April and into May, we were doing quite well. Like we were. There was a lot of activity. Some of our activity actually approached the levels back in 2021 during the peak years, which was really interesting. Now, when we got to June, obviously it appeared that the Bank of Canada was going to raise interest rates on July 12th. So there was anticipation of rates going up. So then we started to see the market slow down a little bit. And then, as what usually happens when there is a rate increase, the market reacts. And so we kind of saw this slowdown that we're currently in right now. And this is pretty much across most of the market. Now, that's not to say that if people, in high demand neighborhoods come in, they price well, things are always going to sell. That's kind of the nature of our business. So right now we're in what probably is a typical summer market at this point in time, and that's where we find ourselves.
So when you look at the biggest news these days out there are the interest rates and the interest rate environment. There's still uncertainty about the economy, but those two factors though don't affect the potential home buyers in this particular market as they would say the general housing market, would they?
Yeah, no, absolutely right. Interest rates, what we usually say, has a greater impact on the conventional market as opposed to the ultra luxury space. One thing that just recently came out is 50% of the homes in Canada don't have mortgages, right? So 50% do have mortgages. A lot of those people have locked in. So even these rates may not have an impact on them, depending on the term of their mortgage. But yeah, you're absolutely right. The luxury, ultra luxury buyer is less impacted by any kind of rate increase.
Okay, what are some of the key factors that drive this market these days?
Well, it's interesting. I think we talked about this last time that the federal government has brought in over 1 million new immigrants last year, and I think this is having a much greater impact on our market than a lot of people. People are starting to talk about it a little bit, but it's having a big impact because we have. Once again, we've always talked about the chronic shortage of housing inventory relative to our population. So you're bringing in a historic number of immigrants into a country that doesn't have enough housing to accommodate its current population. So that is putting a lot of pressure on the market. And, out of 1 million people, we always assume 60% are in the home buying class. So that's going to put, pressure on the resale market. If they can't buy, they're going to rent. And we're seeing a shortage of rental properties. Rents are continually escalating. So the impact of immigration and the historic levels that the federal government is bringing in is really having a pronounced impact on really most of the conventional market, but some of that will seep up into the luxury market as well too.
Okay, then. Now, John, when you're looking into the rest of this year and let's say going beyond, where do you think that market is headed?
Well, once again, because we have this chronic shortage of housing, we're not adding housing, at a rate that addresses anywhere near the demand. And it also depends if the federal government continues to bring on historic levels of immigration. So that could potentially impact us. But
Mhm.
I don't see demand diminishing, right? Even as interest rates have gone up, there's still a lot of people that want to buy. They want to get into the market. A lot of them have been pre-approved, but a lot of people just want to get into the market. It
Yeah.
is taking longer to accumulate, the deposit based on obviously the escalation of prices. But home ownership is really important to Canadians, and that dream has, we did a survey recently that supported that even the younger generations, which they said wouldn't be interested in home ownership, want to be in home ownership. So home ownership is alive and well. So I believe real estate as an investment will continue to be strong, barring some unforeseen, political or
Yeah.
economic event. Real estate is still one of the best investments that you can possibly make.
Now, Don, earlier this year, the federal government brought in the foreign buyers ban on purchasing properties. Has that had any impact at all on the market?
Well, I think once again, it had probably unintended consequences. I think it was brought in probably more of a politically motivated initiative rather than a well thought out plan. And what it did, it took some of the people that wanted to invest in pre-construction and new construction out of the market. And so we saw money being pulled out that would have created new units. And so, obviously the federal government had to go back and they had to retool it and they tried to soften it. But at the end of the day, the foreign buyers play such a small percentage.
Yeah.
I think, politically it sounds good to prevent them from coming in, but the actual impact on the market is really quite insignificant relative to the rest of the market.
All right. Thank you, Don, for joining us today.
My pleasure, Mario. Always wonderful to see you.
All right, that was Don Kottick, who is president and CEO of Sotheby's International Realty Canada. I'm Mario Toneguzzi, managing editor of Canada's podcast, Taking Care of Business. Thanks for joining us today.